Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets. Let's get started. I have great news this week. We are not going to talk about politics in any way, shape, form, or fashion.
And there was much rejoicing.
Instead, we're going to talk about the hottest, sexiest investment that everybody's talking about and nobody understands: Bitcoin. So let's start off by saying that when it comes to understanding Bitcoin completely and thoroughly, you have to understand a technology called blockchain. Frankly, don't quite understand it. But if you want to just kind of get a high-level understanding of what Bitcoin is and why there's such a frenzy around it and what the potential risks are, that's what this Market Insights is going to be about. Okay, so first of all, what is Bitcoin? And the answer is, it's nothing. It's just a computer entry. It's a computer ledger. And that computer ledger is maintained by that technology called blockchain. So how does it all work? Well, there are these people that are called miners. And what the miners do is they solve complicated mathematical puzzles. And by solving these mathematical puzzles, they confirm how many Bitcoins are out there in the system and who owns them. And that's pretty important because obviously if it wasn't, if you didn't have to solve this complicated puzzle, then anybody could say, hey, I own a Bitcoin. Well, nope, you've got to go through this very, very complicated process. And also there has to be a critical mass of miners who all agree, yes, you do own a Bitcoin. So there's kind of like this group validation of how many Bitcoins are out there and who owns those Bitcoins. Are you feeling warm and fuzzy about this investment yet? So you may ask yourself, why do these miners spend all the time and energy and effort to validate that other people own Bitcoins and how many Bitcoins are outstanding? Well, they get paid for this activity by being issued new Bitcoins. And that's why they're called miners, because this puzzle solving activity, this validation of the blockchain, is how new Bitcoins are issued because that's how they're paid for this activity. All right, so another key element of Bitcoins is that the more Bitcoins that get mined, that get created through this puzzle solving process, the harder the puzzles become. So it becomes more and more difficult to create new Bitcoins. And that limits the supply of Bitcoins, and that makes it, more valuable, I guess, over time. Now there's a contra to that as well, because the higher the price of Bitcoin goes, and Lord knows it's been going awfully high the last 7-8 months, the more the price increases, the more profitable it is to become a miner to validate that blockchain transaction. And so the more it makes sense for people to invest in all the computers and all the electricity necessary to solve those puzzles. So as the price goes up, you're probably going to get more Bitcoin, which is going to keep the price from going up too much, you would think. All right, so those are the basic elements, and I'm sure everybody is just as confused as they started, but it gets even more confusing when you ask the key question, what is a Bitcoin worth? And the answer, quite frankly, is a Bitcoin is worth what someone will pay for it. It has no cash value, if you will. It never produces any cash flow except the cash flow you get by selling it to someone else. So it's a very, very esoteric concept in terms of what it's worth. Now you could say, well, wait a minute, you could say pretty much so the same thing about, say, gold or silver. I mean, sure, you can make jewelry out of it, and there are a few tech applications of using gold and silver, but for the most part, gold is worth something because somebody will pay you something for your block of gold. The difference between gold and Bitcoin is that human beings have agreed that gold is worth something for about 5,000 years. And Bitcoin is a little bit newer than that. The blockchain kind of came around 2008 based upon some papers that a Japanese guy wrote in the middle 2000s. So what it's worth what other people pay for it. People are willing to pay an awful lot for it at the moment. Now, what are the risks of investing in something like Bitcoin? And the answer to that is lots and lots of risk. The first risk is what I call the Pokemon card risk. Now, when my kids were little, Pokemon cards were all the rage. And I can remember when Robius Elementary School would get together for their little fairs, there would be these booths set up and people were trading Pokemon cards, and this Charmander or whatever card was worth 50 bucks, but this Charizard card was like 100 bucks, and you're like, why is people paying so much money for a little piece of cardboard? Well, within a few weeks, everybody started asking that question, and suddenly Pokemon cards that had been worth 100 bucks the week before were worth absolutely nothing, because people just kind of woke up one day and said, this doesn't make any sense, and they just stopped wanting them. And since the only value is what someone else is willing to pay you for it, if somebody stops being willing to pay you for it, the price collapses. Now that is one risk, and who knows what the likelihood that the Pokemon event happens for Bitcoin. But there is another risk that I consider to be a lot more serious and a lot more potentially impactful in Bitcoin investors in the near future. And that is, for the 5,000 or so years that we have had money, governments have been very, very protective of their monopoly on being able to issue money. Governments don't like the fact that Bitcoin is out there, kind of creating a quasi-independent currency that no government, no central bank, no Federal Reserve is actually responsible for issuing. It's all in the private sector. Now that may sound great to the libertarians out there, but to a government, maybe not so much. And governments have already shot a warning shot across the bow of Bitcoin investors, because they decided several years ago that they wouldn't tax Bitcoin like you do a currency. When you take a dollar bill out of your pocket and buy something, you don't have to pay a tax on the dollar bill, all right? But with Bitcoin, you do. It is taxed not as a currency, but as a commodity. And that was first warning shot from the government that they don't like this thing. Now, that warning shot in the last few months, in my opinion, has gone up several notches in seriousness, because the Chinese Communist Party has launched a government-sponsored cryptocurrency. That's what Bitcoin is. It's a part of this larger category called cryptocurrencies. Well, the Chinese Communist Party decided, people are making tons of money on this Bitcoin thing. Let's have our own cryptocurrency. Now, I am going to suggest that if the Chinese Communist Party was willing to crack down on Jack Ma and Ant Financial, this huge, gigantic corporate conglomerate in China that has just innovated in the financial world tremendously, the Chinese Communist Party cracked down on him and his company big time because he was horning in on the turf of those Chinese state-owned banks. If they were willing to crack down on him, are they willing to crack down on Bitcoin? And if other governments start saying, we don't like this cryptocurrency horning in on our ability to be the only people who get to make currency, if they create more and more regulatory barriers, this week the United Kingdom investment regulatory authorities announced that Bitcoin investors would not be eligible for the fraud protections that are extended to investors in stocks and bonds in the UK. Again, warning shots that governments don't like this Bitcoin horning in on their turf, and if the regulatory crackdown happens, then the price of Bitcoin could go down pretty doggone fast. So, if all these risks are out there, why is Bitcoin going up? And going up so dramatically and so excitingly? Well, the answer is we've been saying for almost a year now that all the money being printed by the Federal Reserve, the Bank of Japan, the Bank of England, every central bank around the world, is fueling, in all likelihood, a bubble. And bubbles don't happen in the same places all at once. The first markets that have bubbles are the sexiest, the most exciting, and in some instances, the ones that are most difficult to understand. So the fact that we are seeing this dramatic rise in an asset that is difficult to understand and difficult to value, that's not an atypical thing to see in bubbles. And the fact that it is happening now in Bitcoin suggests to us that we are now starting to see those bubbles form in the places where you'd expect them to form, and then they will spread next to the asset classes that are more traditional, like equities, like housing, and like traditional commodities like soybeans, aluminum, and gold. Thanks for joining us for Market Insights. We hope you found it informative. If you'd like more information, you can subscribe at the link below, or you can check on our website at caravelconcepts.com. Thanks.